Good morning, folks. It's about 2 hours and 20 minutes roughly before London session on Wednesday. Of course, we have FOMC coming up, so any trades before that will be in early London session and definitely have our stops to break even or be out for FOMC. Of course, you are going to hold trades over FOMC. You do have the risk of your stops being jumped, as I'm sure you all know. But let's take a look at some possible trading opportunities for the rest of the week. We'll start with pound CAD. This is on the 1 hour time frame. What I'm going to be looking for is a move back down into this area, potentially, as I mentioned before, a spike to the 4 hour 55, which should be moving up to join in near the super convergence zone, which, as you can see, has already held up price twice this week. So basically what I'm going to be looking for is for another touch on the bottom of this wedge. So I'd like to see during today's trading a move down and then back up and a break of this wedge. Pretty much what I'm looking for is a break of that bottom trend line or to be above it on the hourly and look for entry. You can see when I did the analysis on Sunday, we were here and we did have a nice move, but it wasn't too tradable on the time frames that I look for entries on. You can see that we had an initial move down here and some buying pressure. We made another move. Sorry, we need to get a new mouse. So initial move with some buying pressure. We made another move down. We even touched the super convergence zone, but we could definitely not sustain that. There's not enough selling pressure by a long shot. And that hour closed up here. Problem is that that's definitely not an entry on the 1 hour. This is the 18th at 9 GMT. So if we look at the 5 minute, that bullish close is there. It's 10 GMT. You can see that we really don't have anything that's going to potentially make us look for a signal until right here. This is a pretty classic pattern that I look for on 5 minutes. We're at this point, this area, we're already on the hour chart. That's where we're putting pressure in, and then here is where we've closed back up for our PFT style formation, and you can see that that coincides with a move into the sell zone, a move into the buy zone. This doesn't count. This is a move into the buy zone. And then we have a touch of the 50% and a move back up, which coincides here. So that's definitely what we want to see on the Fibmaster chart. The problem is that that doesn't correspond well to price action or the Momentum Master chart. So here we have the Momentum Master chart, and this would be the corresponding entry candle, which doesn't work too well. Now we do have the next candle, which closes up and does give us a green shadow candle, but we have the daily high right here. So we don't really break that until these two candles. So overall, I don't really like the look of this on the 5 minute. It's not convincing enough for me. Just for some conjecture, because I don't use this, might look at this time frame for entry, but we can look at the 15 minute just because. Alright, so on the 15 minute, just for conjecture, somebody wants to test this as an entry, I think 15-minute time frame could be a good entry time frame for Forex when we're looking at the 4-hour and the 1-hour analysis. However, it's not tested yet. So here was our part of our strong candle on the 5-minute, or our 5-minute makes up part of that. So we have this candle, which is far more convincing on this time frame than it is on the 5-minute, where we still didn't break the daily high. But we do have this candle, which is a little bit extended, but it's not too far out where we couldn't get a reasonable stop loss. And if we look at the Momentum Master chart, you can see that we have the pretty classic pattern here where we've been moving up, came below, broke above, and then we stayed there with almost a shooting star pattern on 15-minute. Of course, it's 15 minutes, so candle pattern is not as important, but in just 2 candles after that pattern, or the second candle after that pattern, we've broken above the high, and that does line up. We have nice growing candles here, a nice steep upslope starting to form there on the bands. And of course, we've already mentioned that it works here, and we're not too far above. We can put our stop down here, and that gives us a relatively small stop. About 40 pips, which is not that big of a stop. Of course, it's bigger if you're talking about a 5-minute time frame, but on a 15-minute entry, especially when that analysis is done from an hour or 4-hour on pound CAD, when you've got 140 pip ranges, a 40 pip stop or 45 pip stop is not all that big, especially when we're looking at this midterm fib and WR1 as our target, which of course you can see probably shot up there pretty quickly. Of course, so all the 15-minute talk again is conjecture, but if somebody's got the time, definitely a entry time frame to look at for Forex. But again, for me, on the hour and the 5-minute, there wasn't a good entry signal there. So I'm looking again for price to come down in this area, and we have potentially this wedge pattern move down, and then a break up. All right, pound odd. I said I was looking for a move to come back down into this area, the EMAs, and that trend line. That happened as well. We didn't quite get there. Well, let's take a look at where we did stop at, right in here. So let's just box this area. And I think we can even go back a little bit further than that, and you can see where this was a good support and resistance area. Yeah, we can go back a little bit further. But anyway, so basically there weren't enough sellers to even push into the EMAs and the trend line. We only hit the support and resistance level that's in that area, which we can see to the left of our chart. Again, the problem here, even though you can see this was taken on a demo account, that's by my test EA, but the problem here was this didn't provide a real good signal on the hour or the 5-minute. Here, where this entry is, we're already a little overextended, and you can see we didn't move much further. It's because we have this top here. So what I'd like to see is another retest of this area for that to hold, or potentially a move down just to here. That's just below 1.95. It's about 10 pips below, which of course you know can spike through there and come back up. What I'd like to see is a break of this range. Of course, it doesn't give us a whole lot of room up to the most recent high in WR1. So we're definitely going to have to see what FOMC does here. Pound odd is not looking to be too tradable at the moment. Those are the options that I would look at, but I think potentially we have better pairs elsewhere. Right, so let's take a look at pound yen. To trade this again, we have this support and resistance line, which is also near the 55. The 55 is pulling a bit away from it now. So we have that to work with. We could see bigger spikes where I mentioned back down to 184.30 for FOMC. That's still a possibility. There was an opportunity on this pair as well. You can see on the hourly that we pushed through the 4-hour 55 and stopped on the midterm fib, which was the horizontal support and resistance from the 4-hour. And you can see that we got a nice engulfing candle here where we touched, almost touched the midterm fibs within like a pip. So of course on the hourly we don't have a sumo there, but let's take a look at the 5-minute because we know that's a nice move away from a support and resistance level and back above the 55. So if we take a look at the 5-minute here, our hourly engulfing is, that's the end of it. Basically that's the close of that engulfing candle. So if we look here, this would have been nice, and it does work on the chart, but we have the super convergence zone here. So we do have the option to wait a little bit when we get, again, that move down to the 50% area on Williams. And we have this nice candle here, which we've already broken the Dynafib, broken the super convergence zone, come back into the Dynafib, moved out of it again, and here we've touched it and failed to move into it. So all that's pretty compelling information that we're going to be continuing to the upside. And you can see that this candle does get us barely into the buy zone again. So if we take a look at that again on the Momentum Master, you can see that that is this candle right here, which again, pretty good pattern. We have the move down, the initial kind of attempts to break, move up, move back in, which hits the low side, fail to get through, and here a little bit, we're consolidating a little bit, but we have pretty strong information that we're going to continue the move to the upside at this point, which does happen from here. We have conservatively about a 35 pip stop, or more aggressively about a 20 pip stop on the swing lows, and at the highest point 47 pips from entry. So to recap what I'm looking for ahead, basically the same thing, if depending on what happens early in London session, or depending on the severity of the reaction to FOMC. We have this area again to look for a reaction off of, and we also have the 50% fib, which coincides with the Dynafibs, and also another horizontal support resistance level, 184.30. Euro JPY has broken below the daily 200 and the 4-hour 55. You can see that we've touched the Dynafibs. At this point, the only things that I would be looking for is a move down to the daily 55 and then enough room and a good long signal to get in with enough room to get to break even before we come up to these EMAs again. The other potential is a break back up, a pullback, and then a signal to go long from there. AUD USD, we broke the trend lines that I was looking to trade off of. I think there may have been a 5-minute signal in here. The EA took it. I don't know what the signal actually looked like. I haven't looked at it, but that would have been a loss if the signal did look good there. So the question now is, the longer term bias is still to the short side, I believe, and the daily 200 kind of confirms that. However, our shorter term, obviously everything is looking for more of a buy, which is what our fib was for the week. So normally we're not just going to see a straight, start moving way down off of the first bounce off the 200. So potentially still a push down into the 4-hour 200 and the daily 55 for a move back up on it. FOMC will most likely interfere with this, but it could happen early in London session, and we'd look for a move back up to the daily 200. After FOMC, we look for basically the exact same thing to the long side, but to the short side, if we do happen to just make one touch of that daily 200, is of course a break of the daily 55 followed by a pullback and a subsequent move down. And if we do see that, we definitely want to get below this level. AUD JPY, I thought might give us a good trade early, but it's kind of just hovering around. We did move down into the 4-hour 55, and we're kind of stuck in between this little area of support and resistance. You can see, of course, we have all of the super convergence zones. So what we need is either a bigger pullback into the Dynafibs, as that's worked before, but preferably for me down to the twin EMAs down here. The problem with going into the Dynafib is by the time you get a signal for the long, you're in this area. So what we would need is a pullback to here, signal for a long just above WS1 and those super convergence zones, and that gives us a little bit more room before we hit the midterm fib at 95.30. Also, we would like to see a break up above 96, pull back to the super convergence zone, and then a move back above 96 again. Of course, this doesn't give us a whole lot of room, and FOMC could just blow that out of the water. On New Zealand dollar versus the US dollar, we did continue the move down, but we didn't pull back quite enough, didn't make it to the 4-hour 55, and I was looking for a bigger pullback into the daily 55. This could provide us a good opportunity if there is a lot of wild movement on FOMC. Potentially, if we get a spike up into this area, wait 45 minutes to an hour and a half usually after news for things to settle out, and we could see potentially a good short signal from there. USD JPY hasn't moved back down, so of course we didn't have that entry from 118.75 that I was looking for. However, we are currently attempting to break out of the range. We're making an attempt at 121 right now, so if we do get above there, we can look for basically the move above 121, pull back to WR2 or MR1, which is right around the top of our range. So we're already up there, but we want to go above 121, come back, and then retake 121 a little bit higher, and we can get an entry there. Euro USD is setting up nicely for a trade. FOMC week fashion will probably make that entry happen right during the news, so that'll be tough for us. Of course, that's not going to completely lock us out. Hopefully, as after the dust settles, we should be able to get an entry. We just won't get as much of the move as if we could trade through the news. But definitely want to see the daily 55, 4-hour 200 hold, and then an entry to go long. Something drastic does happen during FOMC, and it looks like we could see a strong break of the EMAs and potentially the monthly pivot right there at basically 1.1. We could see a bounce off of 1.1. However, if the EMAs hold and then we break through 1.1, that should be a good signal to short, which would resume the longer term trend. All right, so that's what I will be looking for over the next couple trading sessions. Definitely be careful around FOMC. If you can, get out of your trades or at least be well above break even so your stops don't get jumped. And happy trading, everybody.